Recently, the US dollar has been sliding in value while the Trump administration has been taking major steps to promote cryptocurrency. Some people are asking, is this a coordinated strategy to weaken the dollar in favor of digital assets? And more importantly, who really benefits and who gets hurt? Let's break it down. The dollar has lost around 10% of its value this year, the worst start in half a century. Why? Several factors. Trade tariffs and aggressive economic policies have raised costs. The White House has openly clashed with the Federal Reserve, shaking investor confidence. And there's talk of the so-called Mar-a-Lago Accord, a framework to deliberately devalue the dollar to make U.S. exports more competitive. A weaker dollar might sound good for exporters, but for everyday Americans, it means higher prices on imported goods. Things like groceries, medicine, fuel, and electronics. For lower and middle-income families who spend most of their paycheck on essentials, this feels like an invisible tax. At the same time, Trump has been moving aggressively to legitimize cryptocurrency. He signed an executive order banning a government-controlled digital dollar while opening the door for private digital assets. Congress passed the Genius Act, creating clear rules for stablecoins backed by dollars or U.S. treasuries. And the U.S. government even launched a strategic Bitcoin reserve, holding assets like Bitcoin, Ethereum, and Solana, almost like a digital version of gold. This isn't just policy. Trump's family and allies are personally connected to crypto ventures, hosting summits, partnering with stablecoin firms, even investing directly. The effect? Crypto prices rise, industry confidence grows, and digital assets look more like mainstream investments. So if these two trends are running in parallel, a softer dollar and stronger crypto, who benefits? The winners are wealthier investors, tech-savvy households, and anyone already holding crypto or diversified assets. Exporting industries may gain a short-term boost too. The losers are the working and middle class. They don't typically hold Bitcoin. They don't own big stock portfolios. They keep their savings in dollars, and that dollar's losing value. Their wages don't rise as fast as prices, and they're paying more at the checkout line with no hedge. In short, this combination widens inequality. The wealthy see their crypto and assets rise, while the poor and middle class feel the squeeze of higher costs. Is Trump deliberately devaluing the dollar to favor crypto? There's no hard proof of a direct link, but the results speak for themselves. Policies that weaken the dollar disproportionately hurt everyday consumers. Policies that boost crypto disproportionately benefit investors. Whether intentional or not, the two strategies run side by side, and together they create a powerful shift in who gains and who loses in the U.S. economy. So, while headlines focus on crypto rallies or dollar declines separately, the real story is about distribution. Who shoulders the burden and who reaps the rewards? Right now, the answer is clear. The wealthy and crypto holders win, while the middle and lower classes bear the cost. The question is, will Americans notice before it's too late?